All right, so I mean, looking at demand here, the big takeaway is there's just been tremendous volatility. I mean, the pandemic resulted in an extremely unusual situation for the industry. I don't think anybody's seen anything like that before, where we went from the global economy was locked down, sales basically stopped, to $7 trillion of economic stimulus in the developed markets, which just led to this huge surge in demand for hard luxury and diamonds in particular, as people couldn't spend money traveling or going out to eat and that sort of thing. So it was a highly unusual and highly volatile period for the trade. I think when you just kind of take a step back and look at where we are today, so for instance, say like Signet Jewelers, it's the largest diamond seller in the world. They're the largest diamond seller in the US. It's a public company. They're pretty transparent. And just kind of direct your attention. So in 2019, they did $6.1 billion in sales. This year, they're going to do about $6.9 billion. So I mean, we're still over 10% above where we were pre-pandemic. And this year, their guiding sales are going to be down a low to mid-single-digit percent. Sales were down a mid-single-digit % last year. So at least in nominal terms, diamond sales are still growing. I think it's a good proxy for the U.S. market. I mean, the U.S. is now over 50%. It's probably 53, 54% of the market. So the industry remains significantly sensitive to demand for diamonds in the U.S., and that's going to continue for the foreseeable future. Especially as China is in the situation that it is. Just kind of getting into some kind of more nuanced things that I'm looking at. So the jewelers in the U.S., say it's still definitely a highly promotional environment. They basically bought too much inventory coming out of the boom years of 2022 and 2023. They have too much inventory, and they're trying to liquidate that inventory and improve their own cash positions, and that's resulting in discounting. I mean, they're discounting diamonds. With in this industry, it's a luxury product. We don't ever want to discount. I mean, Louis Vuitton, Hermes, they never discount their products. And I think as a trade, when we do discount diamonds, it has certainly has a negative impact on consumer sentiment. We're seeing that in China right now, where they're definitely prioritizing gold over diamonds, and part of that is just because the industry got caught in a situation where it had too much inventory and it started discounting diamonds, and it definitely has damaged the sentiment of diamonds as a store of value and as a highly valuable product. That said, the U.S. I think has been doing a pretty good job of working through inventory. I'm sure all the manufacturers here have experienced that firsthand, that inventory buying is down. Companies are holding less inventory than they thought in the past because they got stung in the last few years. That said, I think once confidence returns, in the U.S. retail market, I think you're going to start to see them kind of build back inventory levels that maybe they've had more historically. But they're hesitant to buy until they see stability in prices. So again, so much of this is about confidence and sentiment. And I think once we finally start to see polished prices at least stop going down and hopefully go up a little bit, that's, I think, where you're going to see demand for inventory purchasing in the U.S. to start to return. And I think we're just finally starting to get to that point now.